Okay, guys, it looks to be that the end of the bear market rally is upon us. This is something we've been looking forward to. Remember, our target always has been 4,200 on the S&P since it started, and we overshot it a little bit. That's okay. We anticipated that possibility too. Regardless, we were looking for the signal, and a sharp sell-off like this is about as good one as you can get. We are clearly losing the momentum on all time frames and all resistances and all moving averages. So with that being said, it stands to reason that we are headed down. Now, it could chop along the way. You're going to get plenty of reflexive rallies, blah, blah, blah. But for the near term, I would say that we have momentum to the downside. So what does that mean for uranium, gold, and silver? Well, not what most people are going to think. I think a lot of people are about to get this wrong. A lot of people are about to screw up big. Okay? I'm counting on it. I'm telling you right now. I actually have an update that I'm working on right now, and it's a big one, and I'm going to cover kind of the big macro situation, what's going on. I hope to have this done by Sunday, if not Monday, and we're going to go kind of deep dive on all this stuff. For now, I'm just kind of giving you a broad update. We're going to dive right into uranium, gold, and silver, but I want you guys to know that just because the broad market's rolling over does not mean that we should not be accumulating strong, fundamentally bullish things like uranium, gold, and silver, fertilizer, agriculture on technical weakness, not on technical weakness, but on technical levels of strong support. All right. We're going back to the original plan here. I think we're lining up for some big things. So just be confident. Now more than ever, you have to navigate these markets, and that's exactly what we're going to do. All right, uranium crew, this is exactly what I was talking about. I warned you about this. I told you do not chase. I pointed out the 2 gap opens in a row and the warning that if you got a third with a failure to follow through, that would turn into what? Selling. And that's exactly what happened. That's why I urged you to be patient. That's why I titled my video the way I did, right? Bears nuked? Question mark? Have caution, because I don't think so. The move did not look that good. I mean, it did on a volume basis, right? It looked good on a volume basis, but it came out of nowhere and it stalled on key resistance across the board. And that confluence of a stall, where it stalled, was your indicator that it wasn't as strong as it looked, and why it was best to have caution and be patient. Because if you got the follow through and the break on these necklines, right? If you got that follow through, then that would be something. That would be a big deal. But if you got the peekaboo, which is to break above and fall back below, what did that mean? It meant bad news bears, didn't it? And that's exactly what we got. We came up here, we peekabooed on energy fuels, and we fell back through. Sure, it caught on the 200, but it's putting in a very clear diverging RSI. This looks weak. To get a failed breakout, to get it denied on diverging RSI is very weak. This looks very, very bad. I do not like this at all. In the case of UEC, it never even broke the neckline. It was denied firmly. Again, it stopped on near-term support here at the 50, but there's nothing really good about it. I mean, it's a failure so far, right? And so you're kind of waiting to see what it does. In the case of Cameco, this looks kind of rough too. And the RSI is almost telling the same story. So let's put some lines up here. Now we can see now that our price ascends over time, right? We're setting higher highs. That's pretty clear, right? Well, the RSI is not doing that. From the same timeline, we are putting in lower highs. So this divergence isn't as strong, but it's still there. The weaker the name, the stronger the divergence. So you can probably expect some of the weaker names to sell off a bit more, while the bigger names just maybe catch down to their 50. I mean, that's a decent ways to fall. Let's check it out. That's another 8% in Cameco, but honestly, you're looking at the 200, if not the trend line. That's another 15, 16%. Just something you should be looking forward to. Now, on a daily basis, anything could happen, anything could change. I mean, this event right here was a testament to how fast news can come and move markets. But unfortunately for uranium, this news from Japan was not strong enough to help it break on a technical basis. And this is exactly why we use the charts to help us determine the strength of moves, so we don't get duped out like all these suckers did. All right. So this is why technical analysis is so valuable. This is why it's key. And, this is why I explain everything to the T the way I do, so that you can copy it especially when you see what I'm saying works and it's real, so you can do it yourself, right? So you don't even need me, right? You can take this, apply it for yourself. Go to tradingview.com, create a free account, put some lines on here. You can use my charts as a cheat sheet to get started, right? And, get to it. I mean, this is so easy. You can empower yourself to do these things. Now, let's look at global atomic here. Again, we have a bearish divergence here on RSI and price. It's not as strong, but it is still strong, right? It's like, it's pretty clear, put it that way. And again, we peekabooed and we fell back through, and that's a bad look. It's a bad look. Doesn't look good. This is not something you want to chase. If anything, you're back to a yellow turning orange flag here in the uranium space, where you're using this as an opportunity to perhaps get out of position before a much larger move down. SMR, I told you directly that this was going to sell off because it was much more clear. Again, the RSI was telling you what was coming. All right, it was telling you what was coming, especially the divergence right here, right? I mean, that was pretty clear. This was telling you that a big sell-off was coming. So since then, since that video, we are now down, 10%. And it's got more to fall. It's going to come to at least 1292, if not touch the breakout of this channel at a bare minimum. And beyond that, you're going to come all the way back down here. It wouldn't surprise me at all. It doesn't look very good. It's got more downside. Now, in the case of Sprott Physical, I mean, it looks okay. There's nothing magical about it. There's nothing really bad about it. It's just kind of doing its thing, right? You are threatening to put in the golden cross again here on the moving averages, which would be nice to have. That's a bullish sign. That means you're going in the right direction. But I don't expect anything big based on what I'm seeing. Again, in the markets, any kind of news could come to change anything. We'll see. But technically, on a technical basis here, I'm not seeing anything good or bad. It's more or less neutral. It's more or less kind of idling by. I don't think it's a very good reference for too much right now. I mean, that nice breakup did put Spot, I think, at a premium or just below it. And so that was nice. That kind of matters. But in terms of price action, in terms of technicals, it's kind of meh. In the case of Centrus Energy, I will tell you that it has already put in some pretty bearish divergence of its own. You can check out this pretty clear price action right here. And so at minimum, you're going back to 36.87. I can almost assure you of that. So you're talking about another 15% downside, if not touching the trends at about 20%. This baby's rolling over. When we zoom out on the weekly time frame, it's not really doing anything better. It's putting in the same kind of divergence on the weekly too. So at minimum, maybe you come down and test this trend line. You come down and test this 50. Maybe in a best case, you chop sideways for a while, do some consolidation for a future move. But right now, you're not a buyer. If anything, you're a trimmer or a seller. Again, on Silex, let me switch to the daily. On the daily chart, this is what I had alluded to in the last video, that we were down here and I said, look, this thing might crank up one more time. If you can get over 350 or something, consider taking profits again, because on the short-term time frame, it has the energy to kind of ramp up and do something crazy, make a spike move. But when you zoom out on the weekly, and by the way, look what happened. Look what happened. It did that very thing the next day. Now, you zoom out on the weekly though, and it continues. It continues to set up for a long-term sell-off. Again, look at this divergence. Look at the price action on the top here on the weekly chart, and then look at the RSI over the same time frame. I mean, what's it doing? It doesn't look good. It doesn't look right. It doesn't look healthy. I think that this is destined to roll over and at least touch this 50 at some point. I don't care if it takes 6 months. It's going to touch it. I can tell you that right now in all confidence. I think that if you're holding this thing, for sure you're not buying. You are not buying Silex here, and I'm confident to say that. But if you get up to something like $4, a nice round psychological number on this daily, we'll take a look at the weekly to see if it changes, but I would have to imagine that that might be the limit before it really starts to roll over. Again, this is a fundamentally strong company. There's a lot to like about it for sure, and I would love to own Silex at a good entry price, but nothing about this price is a good entry with these technicals. It has too much downside potential being too far away from its 50. It's just risky. What do I think, fellas? How do we play this thing now? Well, the key now is to be patient. I think that the chart has a minimum short to medium term negative bias to it. Okay, so even on the weekly indicators, on the weekly timelines, there's moderate to heavy bearish divergence, which means we are likely not to do a whole lot of good here over the next week or two. All right. So if anything, you're trimming or selling and raising cash for an opportunity to potentially buy at stronger support levels down below, whether it's as far as $23 on the weekly, whether it's 22.52 or something like that on the long-term trend line. You know, even on the daily chart, you should at least expect something like the 50 on the Cameco, right? I mean, this is just kind of easy to see coming. I really see no bullish tendency in uranium right now. And again, to reiterate, this move feels more anomalistic than it was technically strong. In fact, to see this kind of weakness already is an indication that this was more of a fake out and a sucker move than it was anything else. So I would say hang tight. Do not buy here. Do not think that this little sell-off was some kind of opportunity on a bigger move, at least not yet. Maybe it will be. Maybe it will be. But God bless it. Don't FOMO this thing. At least get the break of this neckline. Please, please, just get the break of this neckline and then chase it. Because remember, if you take the measured move of what you could expect out of this deal, all right, you're talking about $1.71 to the upside. So let's say we putt sideways or something. Maybe you break out all the way over here. $1.71 is still a 41% move, right? And so there's no reason to FOMO. Wait for more opportunity to accumulate somewhere down here, especially if, as we get closer and closer to these stronger trend lines, we can get the same kind of technical indicators that told us to buy here as we did here and here, right? So that could be really, really good. Another opportunity to accumulate for the long term. And that's how I would be playing it right now. I say right now is a matter of being patient. Just wait and see. I think the market's got some stuff to shake out, and we're going to get it. We're going to navigate it along the way. Right now, just be patient. So this is actually the first time I've looked at the gold and silver spot price all day. I don't think anything has changed since the last update. I don't think that this is bad at all. I don't see any negativity here. Just the first glance, look, we still have the same potential. I still think that gold and silver have the same potential for this inverse head and shoulders. I think uranium might have got a jump start. It might get stalled or delayed now. This whole pattern might not happen at all. But if it doesn't, I think plan B is still in place to come get a retest of this pivot. It's really hard to see it going lower than that, and it's especially hard to see it breaking this super long-term trend line, which if I zoom out, you can see goes all the way back to September 2001. This is a big deal. So you can see we are at critical key areas of support already with a confluence not only of this support, but of this pivot and this 200 moving average. It's just too strong. It's just too strong. So if we come down here and get this test, and this applies to the equities too, you got to buy it. 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 I have no fear, no concern whatsoever in the gold and silver space. I am entirely confident in them. I think the charts are incredibly clear. I think they're incredibly bullish. I think they're fundamentally bullish. I think that in my next update that I'm about to give you guys, I'm about to lay out the macro case, and I'm telling you, you got to be accumulating this stuff. It could not look better. I'll get to that soon, but for now, let's move on to the equities. So again, this is the weekly time frame here, and once again, we still have the potential for this inverse head and shoulders to play out. I don't see any problem with the gold and silver equities. I think that they sold off with the broad market, but they're still technically strong, right? They're not showing any signs of weakness, not, whether it's in the short, medium, or long term. Unlike uranium, which is showing short to medium term weakness, I think that gold and silver equities still look great. And I think that if we can watch this kind of start to round out and put in a rounded bottom here, we're going to have a real shot at this inverse head and shoulders. I think this is still technically strong. It's a good possibility. And once again, if we don't get it, we will be looking for a retest of this pivot. And remember, you got to appreciate the historical precedence of how powerful this is. You have to appreciate the confluence of how oversold it is. I mean, it is just ringing so many buy bells. And I want you to look at this reference point here, okay? So just to put this into context for you, in order to be this oversold in terms of both RSI and breadth, you have to go back to 2015, okay, to get to this, all right? That's where we are here. What happened here is happening here. All right. Can you appreciate that? All right. You look at something like Agnico Eagle, and it's telling you the same thing. In order to find what's happening here, you have to go all the way back to when? 2015, to find not only the RSI, this oversold, but to also find the breadth, this huge. All right. Now, what happened back in 2015? Well, you came down to this trend, right? You tested it, you came up, you hit resistance, you came down, you tested it again. And then from there, you took off and you started a whole big bull run. Okay, now what's happening here? Same damn thing. All right, the same damn thing. We're getting the same technical indications, the same levels of being oversold. We touched it, and what did we do? We came up to resistance, and what do we look like we're going to do? It looks like we're going to come down and test it one more time and put in the same pattern here as we did right back here with the same confluence of indications that we have right now. I love it. I love it. I love it. I'm telling you right now in all confidence, I'm going to buy the hell out of this if I can. But it doesn't stop there. Looking at Hecla, I mean, look, guys, it's the same thing across the board. We're seeing the same kind of confluence in gold and silver across all of the equities in the spaces with uranium. This is extremely bullish. This makes it extremely easy to chart, extremely easy to predict. And, I think that this is going to make it easy for us to find the next pivot. So again, we're just going to wait for these things to round out. All right, we're going to wait for them to round out. And if we lose this area, if we lose this potential for this pattern, option number one, that's okay. Now we get a better buying opportunity to add more or get in the first time if you miss this opportunity here. I think it's all very good. I think we're on track. I think we're on the cusp of something big in the precious metal space. I think you need to get ready for it. You can find some very oversold opportunities. In the case of pause, I had mentioned this last time. Look, they're suffering because they have 20% increased cost, but they're also not hitting their production goals, right? They're hitting the very low end of their production estimates. But they're doing that on purpose. You have to understand that as gold and silver prices come down, why are they going to pump out all of their resources as fast as they can for these dirt cheap prices? They're not. So, of course, they're only going to pump just barely enough to stay in business, right? To prepare for what comes next, which is a huge boom. And so what that equates to is the market giving you a discount for free because the market's pricing in today's reality, not anticipating tomorrow's reality, right? Because the issues that are facing POS today are not going to exist tomorrow, which makes this an extraordinarily good opportunity to get into a quality company at a great price. So sitting at about $15.89 right now, I would be highly looking forward to $14. That's another 12% down. I think that would be an extremely strong buy. Extremely strong buy. I'm looking forward to it. And it has confluence. If we come down like we're looking broadly for that retest of the rest, you'll probably get this here at $14. I can see it coming a mile away. I think if you get this opportunity, you got to bite. Minera Alamos, one of my favorite investments here. This has big upshot potential. This is great management, great company, great assets, and a great price. I think if you're lucky, we could come back to this 32, 33 cent area again. This is looking at the over-the-counter here. I think that'd be a buy if you're afforded that opportunity, especially if you drop anywhere below that, you pretty much have to take a shot. It'd be hard to see it go below, say, 29 cents. But anything down in there is going to be extraordinarily opportunistic, and especially considering at today's current evaluations. At 37 cents, this is already a 10-bagger. I think this is the kind of company you need to be accumulating as much as. So in summary, guys, I can tell you this. Don't worry about uranium, gold, and silver, especially in the case of uranium that had this nice ramp up. All that's actually really done is give uranium plenty of space to fall with the broad markets to catch on these lower supports again. So as the broad market sells off and everything sells off, uranium has space to fall without losing its bull market. Remember, this is a bull channel in a bull market, and until this trend changes, this is the trend, this is the reality, and the trend is your friend, and it is a bullish one. So I think, you remember, I called that back here too. I told y'all why we were going to get this pivot here, and it was because this rally gave us space to fall with the broad market. So the broad market could go bear without uranium having to break bull. And that's exactly what we got. I think we're going to get it again. We'll look forward to see what happens. I obviously reserve the right to change my mind, but this is immediately what I'm looking at. This is what I anticipate. In the case of gold and silver, I think it's essentially the same thing. We have room to fall if we need to with the broad market before we hit these critical supports where we will accumulate again in anticipation of what's next. I have a big macro update coming for you guys. We're going to cover it all from the bond market to the Fed. I think it's time to move on from the Fed. We have focused a lot about them, and rightfully so. But I think we've finally reached a point where we can pivot from the Fed. I don't think the Fed is the chief cause of concern anymore. I think it's time to move past them. I think we will be ahead of the market moving past them, which is going to allow us to make a lot of money and fade the narrative, because this is how you do it, guys. You have to be able to be ahead of the market, which is exactly what we are. We're going to stay that way, I promise you, and I'll update you soon.